Who else here is passionate about insurance? Okay. Well, hopefully, in 2008, when I was in a government job and looking to get out and thinking about financial services, I was surrounded by economists, and they said, you may want to look elsewhere than a big bank. And as a result, an insurance company gave me a call, talked to me about the position that I was looking and interested in. And they also walked me through why the company was going to weather what everybody knew was coming, which was a recession. And in the 10 years now that I've been affiliated with the industry, I actually have become passionate about the industry. It does a lot for our economy, for our community, for people. And so what I want to take you through first is a little video, because I want to walk down a path of a world without insurance.
Most folks know insurance is the thing that pays to repair damages to homes and cars. But if people stop to think about what insurance means to today's economy, they'd realize that insurers and the nearly 3 million people they employ nationwide make possible projects of all sizes. From airports, to stadiums and arenas, to coffee shops, to local childhood literacy programs. So to comprehend the many ways insurance makes the economy better and stronger, try to imagine a world without insurance. So what would that look like? For starters, hazards like natural catastrophes and motor vehicle accidents would result in far greater losses of life and property. However, through insurance's support for the Insurance Institute for Business and Home Safety, the Insurance Institute for Highway Safety, and other organizations, homes are safer and more resilient, and motor vehicle deaths have plummeted to a fraction of what they were before 1960. Insurers also collect and analyze data and study ways to make the public more aware of the negative effects of distracted driving and to rate community preparedness. Without insurance, driving to work or having goods delivered to homes and businesses would be a lot riskier and potentially cost more for tens of millions of Americans. Also, workers might not be covered for injuries and illness that happen on the job, which would result in lost wages and financial disruption for families everywhere. But because insurance studies risks and compiles statistics to share with local, state, and federal governments, as well as private institutions, we have policies and laws in nearly every state requiring motorists to have some form of coverage. And all 50 states have workers' compensation laws.
3, 2, 1.
And without insurance, innovation might slow to a crawl, or perhaps not happen. The insurance industry as we know it was built to empower risk takers who have created our modern economy. For more than 300 years since the Enlightenment and age of exploration, insurance has been the driving force that has underwritten investments in transformational technologies. From steam power, to mass production, to aviation, to automation and information networks, to future advancements in artificial intelligence, nanotechnology, and big data. But perhaps insurance's biggest and most often overlooked contribution to economic growth is its key role as a major source of funding for projects large and small. This capital is vital to paying long-term claims, so insurers' investment portfolios often include private and municipal bonds that help finance the growth and prosperity of communities everywhere.
Right after tragedy, you need help. And that's what insurance is there for. We act as the financial first responder after catastrophe. We get into the communities, we help rebuild and restore people's lives and the economy more broadly. We act as a partner to governments and households and businesses, and we help them understand what the risks are, help them mitigate the risks, and in turn they will become more resilient and sustainable for the future.
World without insurance, it's pretty safe to say that life would be a lot different and probably not as exciting. And this is why insurance is honored to play a part in making our economy more robust and resilient every day of the year.
Okay, so more passion? We just put that together back there. That's why I'm wearing the same thing. Well, let me then walk you through some more stuff and let you better understand. The TripleI is an organization funded by the insurance industry, and really our mission is to improve public understanding of insurance, what it does, how it works. We do not sell insurance on our website. We're only there for the consumer, to educate the consumer, policymakers, other key stakeholders about what insurance does and what they need to know about it. So one of the things we also do is we educate journalists, and we handle thousands of media inquiries every year. And so what I'm showing you here on this slide is really a breakdown of insurance-related coverage and what's important and what is the media reporting on. And you can see about 30% of the media around insurance is something that this audience deals with on a regular basis, natural catastrophes. Another 15% you'll see there is a man-made catastrophe that we are seeing on a daily basis reach epidemic proportions, which is the automobile issue. What's going on the roads with distraction and drugs and other things like that. But when we break down that coverage, we actually looked at it and we said, okay, now what's being published, which is on the bottom axis there, and you're seeing things like InsurTech, technology, the auto insurance issue that I mentioned, cyber insurance. But then we also looked at the vertical axis there about what people care about. What are they sharing on social media? And look what rises to the top, NFIP. Right? Number one issue that people really care about. Floods and storms, another big issue, right? So this is what we're dealing with in terms of we want to know and educate people about these programs and what they need to know more about it. And as we do that, I want to also walk you through, though, a little bit of what insurance does. We mentioned in that video about insurance as economic capital and being financial first responders. We have a white paper on our website that you can look at that dives into this slide a little bit more deeply. But if you break it down in terms of safety and security, you heard me talk about financial first responders, getting on the ground, oftentimes right there when FEMA and first responders are there, so is the insurance industry helping rebuild immediately. We mitigate risk. Nobody wants that claim to happen, right? That means something bad happened. So the industry spends, those organizations, how do we make roofs more sustainable? How do we make sure that the highways are more safe? Financial stability. I mentioned I got into this industry in 2008. This industry weathered the financial crisis. In 2010, at the height of the financial crisis, there were 157 bank failures. There were 8 insurance impairments that year. And impairments mean they go into runoff and the claims get paid, the promises get kept. Right? So this industry weathered a big storm and kept its promises. We also do a lot of development. You can't have a big construction project, you can't have big infrastructure projects unless there's insurance behind it. That's what economies do. That's why insurance drives economic growth. One of the other things, and you saw a little bit of that graph here, this represents various industries' contribution to the economy, GDP, right? You've got technology there, internet, mining, securities, banks. What's up at the top? The blue line, that's insurance. 3.1% of the overall economy. Banking is 2.8%. The securities industry is 1.3%. So we're contributing a lot to the economic growth in terms of jobs, taxes, charity, investments. The insurance industry actually is one of the largest asset management industries in the world. $8 trillion in assets under management in the industry. They're long-term investments too, right? We have to keep the investments. In fact, there's $750 billion outside what we call the policyholder surplus waiting there, because if these things kick in the long term, the monies need to be there to, again, keep the promises. On the financial first responders, this organization knows very well about getting on the ground and making sure that lives are saved immediately. But what happens when the water drains, when the dust settles? You've got to rebuild an economy. And this is what insurance does. It gets people back in their jobs. Gets people back in their homes. It makes sure that the economy gets back up and running for the longer term. Because after the catastrophe is just the tip of the iceberg, right? And we've got a lot to do. This organization, FEMA, knows very well about this. They manage the National Flood Insurance Program, right? So they know, they understand that this is not just a day, 2-week issue. It's a much longer issue, something that needs to be dealt with. And this is what insurance and why it needs to be there. Think about auto insurance. Oftentimes people, that's one of the worst things they think they have to buy, right? Why do I have to do it? Why are my auto rates going up? Well, we got more people driving than ever before in history right now. And we got a lot of distraction in the cars and the phones and all of that. But I don't know how many of you have $20,000 sitting around so that in case something happens, you can pay that, because that's what the average, right? This chart shows you what the average cost of a bodily injury claim is. Around $16,000, right? Well, for every and then your average premium is around $500. So that means for every dollar that you spend in premium, you save $30 if something happens, right? That's what your auto insurance is doing. We hear a lot today about disruption, right? It's kind of a buzzword that everybody's talking about. This is what insurance does. Insurance does disruption. We help lead through it. Catastrophes, 2017, it was a record year in terms of insurance losses. We paid all the claims, $91 billion. Economics, I just talked to you about how insurance weathered through the financial crisis in the US and the world, right? Geopolitics, sanctions, tariffs, battles, wars going on in the world. There's a thing called political risk insurance, right? Something happens, supply chain interruption, those types of things. Companies need that insurance in case something happens. A business gets taken over in a certain country that's volatile, there's insurance to cover that. Technology. We're in what many call the fourth industrial revolution. And what I would tell you is that insurance has been there for the first three. All of those innovators, all of those that want to modernize, they need to transfer that risk. What's really neat about this fourth industrial revolution is that the insurance industry is going to innovate itself. We heard from that speaker about artificial intelligence and the impact that that can have. That is something that insurance is looking at, because that does and can predict and save lives. Now the gap, right? As much as it's so important, it's not there as much as we need it to be. In fact, 70% of all catastrophe losses worldwide were uninsured. So people didn't have the insurance. It was a world for them without insurance. And then flooding, which is the largest natural catastrophe in the world, continues to be the largest risk in terms of the gap that we have. We know that in this country. We know that because there is not a strong take-up rate in the National Flood Insurance Program. Now here's what's happening though in the National Flood Insurance Program. FEMA, the NFIP, they're doing the best they can. Look at these claims that they're paying, right? Hurricane Katrina, nearly $18 million in claims paid. Sandy, $11 million. Harvey, we don't know, it's still going up, but the claims are being paid. What I would argue is this sustainable, right? Can the government keep doing this? Here again, it illustrates something. This information is taken from FEMA as well as a McKinsey report. But this graph illustrates we've got less than 5% increases in people getting flood insurance, right? 88% of Americans who actually need flood insurance don't have it. What do we do? How are we going to bridge this gap? Well, FEMA and the NFIP are actually looking at some really neat solutions, and I'm delighted to see it. We're looking at ways to have the private industry enter into it. 60 years ago, when the NFIP was established, the industry didn't have the data and couldn't predict the floods. And as a result, they couldn't offer the insurance that was needed. It's similar to the Terrorism Risk Insurance Act, right? After 9/11, there was so much unpredictability that they didn't feel good after they weren't able to underwrite terrorism. And as such, the construction market in areas like New York City shut down. So it took an act of Congress, TRIA, to actually get the construction market. I think actually at the bill signing, we had people with construction hats because it reinvigorated an industry as a result. And NFIP is like that, right? The government is there as a backstop. But now what we're seeing is the private industry is better. It's got more modernization. It's got more better modeling. And so FEMA purchased reinsurance. And that was a great purchase, right? $150 million purchase in 2017, paid out $1 billion. Increased the purchase by 40% for this year, right? And then catastrophe bonds are another great way that the private industry is entering into it. And then we're also seeing products being offered. One of the TripleI members, Swiss Re, is beginning to offer flood insurance, not just on the traditional modeling or maps, but on construction and location, things that we can better predict how they will respond and mitigate the risks associated with flood. So one of the things I wanted to have everybody imagine, and why do we have such a low take-up rate on flood? Well, think about a world. What you're seeing here is what you probably see any evening or day on national television, right? You can't watch a half hour on national network television without seeing 3 insurance commercials. Try it, right? What if you had that marketing for flood? Because the fact is, over 90% take-up rate exists in the auto insurance and the homeowners market. And I would argue it's because of this great marketing. So how do we bring that marketing into flood? Something to think about. How do we get private industry more engaged? Well, it's politics right now, right? And in the words of the late great Tip O'Neill, all politics is local. And that certainly is the case for our flood issues, right? We have more Americans right now living in flood-prone areas than ever. You know, nearly $2 trillion in real estate is exposed to flooding at this point. I joke, I don't have the facts behind this, but there is a 100-year flood in this country every week. Right? It's one of the worst terms I think we can use this day and age. And there's something that we need to do about it. We need to recognize that there's an issue. But we also have to understand that you have to be actuarially and economically sound in how you price your risk. And right now, the politics aren't letting that risk be priced right. And they actually tried a couple years ago, but they brought it back, right? They came back on it. And this is the moral hazard that's being created in the flood issue. And we've got to do something about that. And I would argue we've got to do something about the politics. But as we well know here in Washington, D.C., that's never easy to overcome. But I would argue it's something that we need to focus on, and it will be the fix. And if we can get rid of the politics, if we can get the private industry more engaged, we will have that power of insurance in something that FEMA deals with very often, which is flood. And with that, I thank you.